YouTube, what is good? It is your boy Trader Kill coming at y'all boys with another big video, man. Today I have another recap video for y'all. If y'all didn't catch the move on gold on August, what was it? August 5th, which is today. You missed out, man. I'm not gonna lie. If you would have watched my recent video, you would have known that price was gonna end up, creating this lower high for this lower low right here. And you could have been able to catch this move, man. So I'm just really gonna go over a recap. I don't really want to delete all of this. You feel me? All of my technical analysis for the upcoming day, but I'm just gonna give y'all a brief recap of what ended up happening. So going on the 15-minute, and before I even start this, make sure y'all like, comment, subscribe if y'all new to the channel. Make sure y'all join my free Discord. Link gonna be in the description, and follow me on all my social media so you can stay tuned with my trading journey. Oh, excuse me. All right, so like I was preaching, right? I was trying to tell y'all that we could possibly be getting after we broke structure right here, after we broke this low and created this lower low. I was expecting, a lower high for a lower low. What ended up happening? We ended up getting that lower high for a lower low. So looking on a 15-minute time frame, we end up having this supply zone up here. They got hit, and I am going to put this in replay mode real quick. Let's go ahead and go right about here. Okay, so I really want to delete all of this stuff over here. I'm gonna go ahead and delete it just for right now. Now I'll put it back on my chart. That way we can have like a clean chart. I like to have the chart clean. So first off, like I said, we had this extreme demand. Supply. After sweeping this liquidity, we ended up getting this huge dump, leaving this supply area right here. Looking at the 4-hour time frame, we end up having all this sell side liquidity right here. And I'm just pulling this up so y'all know, like, when I see these trades, right, where you can potentially get a big move to the downside, I try to see like what's an area where most people would like look to, close their positions. And looking at market structure from the low up, we got a low, we got a high, we got a low, higher low, I'm gonna say a higher high, higher low, higher high, right there. So I was like, possibly we could potentially target all the way down here, maybe even lower. But I was looking to close my position at least right here, or take profit, right? Because like I said, we're in a macro Wyckoff Model 1 distribution schematic right now, where price could potentially, target this potentially target the range low, which would be right here. If I pull out my range tool, we're looking at, go ahead and put it right. Get this off. Pull this knot right here. So yeah, like I said, we're in a macro range, right? A macro Wyckoff schematic, Wyckoff distribution, Model 1 schematic. And where we have our initial range high, first sweep of the range high, and then the second sweep of the range high. Price ended up hitting this equilibrium, coming back up, grabbing all liquidity, right? And then pushing back down, making this a third tap. So this was a Wyckoff Model 1 distribution, but now it done went over into a Wyckoff Model 2 distribution, right? If it was an LPS, like if this was an LPS, I would like for price to, once coming down, come straight up, grab that liquidity, and then shoot down, not go all the way down and then come all the way back up, right? So yeah, that's why I said it's a Model 1 that goes over into a Model 2 and not a Model 1, with this just being the last point of supply, right? But instead being a Model 2 tap, right? So going to the lower time frame now, let's get right into this trade recap. Getting a little better on the iPad. So I was looking at, I think it was the 10-minute pool. I like to look at the highest market structure pool, right? Looking at the higher market structure pool, I was expecting maybe price can potentially go and tap into this extreme supply, right? And then create a Wyckoff Model 1 distribution schematic. That's what I was looking for. What happened? We end up getting that exact thing to happen. So continue pushing price. Okay, and as you can see, we tap into that area of supply right here. Now looking at market structure, we are in an uptrend, right? We got a high, higher low, higher high. When in an uptrend, I pull my range from the top down, which would be right here at this given moment, right? Let me go ahead and rewind it just a little bit so y'all can actually know how I look at my trades, right? So I'm not skipping over steps like that matters, right? That's important just in case y'all want to learn how to trade Wyckoff schematics. So right here we got our initial range high, we got our initial range low. Allowing price to play out, we end up getting the first sweep of the range high being right here. Now when we have that first sweep, I like to extend my range to that second tap, because you never know if it's going to be a Model 1 or a Model 2 distribution, where a Model 1, you just get price coming and then sweeping that high again, possibly tapping into the supply before going lower, targeting the range low, right? And then a Model 2 where it just comes down and it comes up here and it grabs like all liquidity. Say this was the extreme liquidity. It grabs all liquidity, taps into it, and then goes down, targeting the range low. Or it taps into extreme demand, which you would just have to do technical analysis when looking at the chart to see if you have extreme demand. So let's go ahead and do that. Let's go to the 2-minute time frame. So looking at price action, price ended up coming down. All we had was this extreme liquidity right here. Extreme liquidity is just the first market structure pool, right? Where you have this high, the sweep, right? You got the sweep, you got the low, the lower high. But you need 6 candles, right? You need 2, 4, and then it should be a lower low. And this would be the extreme liquidity. But instead, we didn't get the 6 candle rule, so I didn't count this as an extreme liquidity. So pulling our range out a little bit more and letting price continue to play out. Okay, hold on. What just happened? Okay, but I'm about to say I thought price was gonna sweep the goddamn range. I forgot this happened. So what ended up happening was we ended up getting a sweep of the range low. Again. So we end up getting a sweep of the range low. And you can trade the second tap. It's called a range deviation trade, but you gotta have proper market structure where, say from this tap, we end up going down, right? Say we come down like this, lower highs, lower lows, and then we end up getting a lower low, and then a breaker structure bullish. You can enter on this break right here, and you can target, like I say, for this, since it came down so heavy, I would probably target this high, maybe this high, but you could also target the range high, the second top, but not always, right? But as y'all can see in this leg, we don't have no proper market structure, so there was really no entry. You couldn't really trade this deviation with my strategy, right? Because I didn't have an entry confirmation. So then looking at price, what ended up happening is, hold on, got rid of my tools. Happening, letting price play out. Price ended up pushing up. Go ahead and pause it. And tapping into that extreme supply. So now that we done swept the range high, right? Where you got the first sweep, now this is the second sweep, potentially creating this model 1, Wyckoff model 1 distribution schematic where you have your initial range high, got the first sweep, and then potentially the second sweep. And then if we get a breaker structure back bearish, that's your confirmation. So looking at market structure from the low up, we have a low, a high, higher low, higher 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 high. And this is on the 2-minute pull, right? I just noticed it's not a it has to have 2 consecutive candles, right, to be an actual market structure pull. As y'all can see, we came up right here and then we had 2 candles, right? Can't be an inside bar candle, so make sure if y'all doing like the 2 candle rule, it's like a candle like this. Hold on, let me take this magnet off. Okay, so make sure it's a candle. Oh my gosh, it's like, and then another candle, right? And not just a candle and then like an inside bar candle, right? Because then I don't count that as a market structure pull, right? The two candles, 2 candle rule. So at this point in time, I'm like, okay, and I was asleep, right? I woke up, I ended up putting this right on my chart, like at this very moment, and I ended up going back to sleep like a dummy. I'm gonna keep it a buck with y'all. So looking at price, what ended up happening? Ended up coming and let's extend this. Okay, we ended up breaking market structure right here. Boom, break structure, bearish. So when you get that breaker structure, you enter on the break if the risk to reward is worthy, right? Which right now, this is probably the best risk to reward you would ever get. Put your stop above the third tap. Go ahead and move this. And whenever I have a Wyckoff schematic, right? The technical target of any Wyckoff schematic, whether it's an accumulation or a distribution, is always the range low. So I was targeting this low right here. But like I said, I was expecting a lower low on the 15-minute time frame. I was expecting a lower high for a lower low, breaking this structure. And if you look at the higher time frame, there's nothing really holding price up, right? Once you take out this low, except for all this sell side liquidity, just targeting all these sell stocks, right? Just which is gonna just make price even go like dump even harder. So potentially you could have made a 4.89% gain on just this single trade entering at this break structure, targeting this low. But like I said, I was targeting way lower. I was targeting this low to take profits. I don't like how. Go ahead and go back real quick. Make sure I still. So could have made a 4.87. Gotta make sure I don't mess up. Extend this 4.87. So looking at that low right there, you could have made a 10% gain. 1% a day keeps the day job away. So making 10%, man, that's a crazy gain, right? But then I'm thinking, okay, we're in a macro distribution, so I can even target the low of this entire range, right? So let me pull up and go to the lower time frame so I can actually see. Right now I cannot see the can't see my position. Go ahead and go to the lower time frame. It's kind of loading a little slow right now. All right, so I'm trying to extend this so I can actually see it. It's at 10.62 right now. Go ahead and go to hourly time frame. Okay, and targeting that range low would give you a 22.76 gain, right? Being like a swing trade, but then you would want to probably take profits around this extreme demand zone at about 14.68% gain. And that's another place I was targeting. But first I was targeting this low because it just was like, okay, this is the like main market structure low on the higher time frame pool. Let me go ahead and show y'all that right now, where we end up having a high, a low, a lower high, a higher low, and then a higher high. Right there, and then it keeps going. I was like, okay, we could potentially take out this low and then this low, but I wanted to get the first low right, and I wasn't trying to be greedy, but I just wanted to make sure I was secure profits at the right time, right? Because just because I think price is gonna drop doesn't mean that price is gonna drop. The market does what it wants, bro. If y'all don't know that by now, then I don't know what to tell you. The market does what it wants when it wants. So now let's go ahead and pull this here. And just go ahead and target this range low. The technical target of the actual range, trading range of this Wyckoff schematic, I'm going to say, and allowing price to play out. Loading slow. Make sure y'all like, comment, subscribe, man. If y'all are new to my channel, I will be creating more of a lifestyle type of like a vlog lifestyle type of content. But right now, I'm just doing trading recaps until I, build my capital up and just really like be able to, get my own apartment and stuff like that. I just started trading about probably 4 months ago. And with the pace that I'm on and how I'm learning so fast and stuff like that, bro, it's not gonna be too long before, I'm able to do that, right? Where I can purchase me a nice camera and then I can start recording those type of videos. But like I said, allowing price to play out. Ended up coming all the way down here. Then we got a huge buy, right? But normally this is like a LPS right here, where you just come down, you come back up, I'm just grabbing all this sell side liquidity, stopping people out, right? And then pushing back lower. And when you get that pop, right, that buy, they have price coming down so hard, and then you get that boom, that pop to the upside, you can get that pop right back to the downside most of the time. So looking at price ended up coming down towards this range low. Started playing around a little bit, and we finally hit TP. This trade only took, if you were just targeting the technical target, right? This trade took 5 hours and 51 minutes. 5 hours and 51 minutes for 4.8, almost 4.9%. Can't go wrong. Cannot go wrong. But like I said, we was targeting this low right here. Now, like I said earlier, I did miss my entry. So I ended up entering, like, I think after we broke this low, and I entered somewhere around here because, like, I don't know, bro. After I missed my entry, I was like, okay, I'm just gonna be patient and wait for an entry. So letting price play out. Ended up getting that huge sell-off, bro, where it was market where New York session opened, and then everybody just, started selling off. We swept this low that I was talking about, and then price ended up pushing up higher. You can see right there. So that's why it's good to take, your profits at certain lows and not try to hold your profits all the way, because after we took this low, man, we just started going up. You know what I'm saying? You would have lost a lot of money and not secured your profits. When you can secure your profits, allow price to maybe pull back, and then add, some of your profits that you add into your position to target that macro trading range low. But yeah, that's the trade recap, man. If you would have held this entire trade to this low, would have only taken about 7 hours and 30 minutes, right? For 10.63%. That's a whole shift, right? That's a day shift. When you can just get on the computer, tap one button, allow it to play out, and make money just like that instead of having to go clock in and work for somebody, man. So yeah, man, if y'all want to become an entrepreneur, man, make sure y'all, stick to it, continue learning, studying, because it's not gonna be easy at first, but the more you study, the more you learn, it becomes easier. And I think the hardest thing is just discipline. When you become disciplined, everything else just, everything else falls in place. But make sure y'all like, comment, subscribe, man. More content coming soon. It's me, your boy Trader Kill. I'm gonna catch y'all boys in the next video.